Can we start now, sir?
Yes, we can.
Good evening, everyone. Welcome to UCO Bank Q1 FY26 earnings conference call. It is my pleasure to introduce to you the senior management of UCO Bank. We have with us today Mr. Ashwani Kumar, MD and CEO, Mr. Rajendra Kumar Sabu, Executive Director, and Mr. Vijay Kamble, Executive Director, and other senior management team from UCO Bank. We will have the opening remarks from the MD sir, post which we will open the floor for question and answer. Over to you, MD sir.
Thank you. Thank you all analysts for sparing time to join the post results Q1 post result conference call. Along with me, I have our ED Shri Sabuji, Shri Kambleji, and also our entire top management team. Various vertical heads are with me. So first, I'll share a few important salient points of our performance during this quarter, and then we will be open for your question and answers. I believe that our presentation is already uploaded and all of you have gone through the presentation. I'll give you the brief about the numbers first. Our bank's total business as on 30th of June 2025 was we closed 5,23,736 crore with a growth of 13.51% on a YOY basis, which includes deposit of rupees 2,98,635 crore with a growth of 11.37%, advances of 2,25,101 crore with a growth of 16.48%. Within deposits, the saving grew by 4.8%, current grew by 8.79%, and our CASA was maintained at 36.91%. In advances, our RAM advances grew by 23.47%. Within RAM, retail grew by 30.73%. Housing within the retail, housing grew by 17.92%. Car loan, vehicle loan grew by 66.94%. Agri grew by 15.46%, and MSME grew by 20.33%. Our RAM percentage to total advances was 62.97%, as against 61.22% same period last year. Our asset quality, the gross NPA of the bank has been declining on a quarter-on-quarter basis, and now it stands at 2.63%, a decline of 69 bips on a YOY basis. Net NPA declined to 0.45% with a decline of 33 bips on a YOY basis. PCR improved to 96.88%. The improvement is 112 bips on a YOY basis. PCR excluding TWO, that is tangible PCR, also improved by 607 bips to 83.12%. Coming to profitability, the operating profit of the bank grew by 18% to 1,562 crore in this quarter. Net profit grew by 10% to 607 crore in this quarter. Our net interest income grew by 6.64% to 2,403 crore in this quarter. Non-interest income also grew by around 20% to 997% in this quarter. Cost of deposit, our cost of deposit was at 4.84%, whereas in the same period last year it was 4.79. There is a increase of 5 bips on the cost of deposit. Similarly, cost of fund also, it was 4.71 last year June quarter, now it is 4.73%. Yield on advances also, it was 8.76 last year same period, now it is 8.6%. This is the yield on advances domestic level. Cost to income ratio, which was 57.23%, and quarter on quarter basis it is coming down, so now it is at 54.06% in this quarter. NIM global, earlier last year same quarter it was 3.09, and in March it was 3, now it is 2.96. NIM domestic 3.29 same period last year, now 3.18. Now coming to slippages. Slippages for the quarter was around 631 crores, slightly on a higher side than the last year, basically because of the one mid corporate account in the MSME segment slipped in this quarter, which was on our watch list, which we monitor on a quarter to quarter basis. As a result, but overall slippages are within the our guidance given of 1 to 1.25%. And sector-wise slippages, if we look at in retail, slippages was around 149 crore, and agri it was 91, and MSME 370 crore. So slippages, this was the slippages sector-wise. Coming to the SMA book, more than 1 crore. As you all know, we declare more than 1 crore of SMA on every quarter. So SMA more than 1 crore is around now 1,550 crore. 550 crore, and as a percentage wise it is 0.7% of the total advances. Coming to the capital adequacy position of the bank's capital adequacy position is quite strong. We stand at 18.39% with tier 1 at 16.36%. Now coming to the provisions, as you all know, we have been maintaining some additional provision over and above the RBI mandated provision. We continue to hold the same provision at the same level. We have not reversed any provision, and that approximately 1,000 plus crore provision is being maintained in addition to the RBI mandated provision on our books. Now coming to certain initiatives which bank has started last year, where we shared with you was the project Parivartan. That's a digital transformation journey we started in September, and our target was to digitize around 25 journeys in 1 year time. I'm happy to share that till now our team has already developed 22 journeys and 8 journeys are in pipeline. I think by the end of September we'll be live with 30 journeys, 22 already live and 8 will be live more. Last year we targeted 6,000 plus crore of digital business. This year our target is 25,000 crore, and already we have crossed 8,000 crore of digital business in this current quarter. Bank introduced WhatsApp banking also, and 43 services are active, and now we have expanded to 5 languages: English, Hindi, Bengali, Assamia, and Odia. 5 languages are. We are regularly working to increase the services, and 5 more services are in pipeline. So maybe another 3 months time we'll be up with 48 WhatsApp banking services. We have been focusing more on the digital adoption also, and I am happy to share that mobile banking users, which was very low around 2 years back. So we had only 14 lakh active users. Now we have crossed 51 lakh active users as we speak. So it is around 38% of our registered mobile users are active on mobile banking now. Various IT and other initiatives are also taken, which we have already highlighted. Some are more planned in this year. Now with regards to the ATM infrastructure, interoperable cardless cash withdrawal and deposit via UPI facility we are working. Unified dispute and issue resolution system we are working. To improve our robust infrastructure, application performance monitoring software is being implemented. We are also in the process of setting up near DR at Kolkata cybersecurity vault for enhanced cybersecurity also. To improve efficiency and cost optimization, we are now in the process of implementing centralized forex processing center, enterprise, DMS, and CASA back office. Further, to improve efficiency and again cost optimization, robotic process automation is being put in place in selected areas. Then, in order to identify risks and mitigate security and all these things, identity access management system is also being implemented. We launched, announced about the CBDC. Now CBDC is in the final stage. This quarter we will be going live with the CBDC. All approvals and onboarding has been completed. Accounts have been opened. Now this quarter we'll see that CBDC is also live. We introduced tab banking last year in the month. Full-fledged tab banking was launched in the month of March. Now around 35% of our accounts are being opened through the tab banking, that is being used by the branches for quality customer onboarding. To enhance our outreach, bank is now doing carnival on a fortnightly basis, where we focus more on customer outreach in respect of agri, MSME and retail customer, along with the CASA customer acquisition, so that every fortnight it is being implemented now. And last year, with these initiatives, we brought out various new schemes based on the requirements of our customers. Around 11 new MSME schemes were launched in the last year, and around 6 or 7 are additionally planned in this quarter also for bringing out to serve our MSME customers. With respect to HR, bank has engaged 545 apprentices, and recently bank has also taken 182 local bank officers in various parts of our country. Reward and recognition policy has also been put in place. Further, woman-centric policy has been further strengthened in this current financial year. Skill development programs have been introduced for the specialized skill development of our requirements in the IT, risk, treasury, forex areas. To improve our customer service, we introduced Pulse alert monitoring system, and that has been working fine. Now, with the help of this monitoring system, we are able to identify certain mule accounts, and the success rate, which was initially at the start of this alert monitoring system was around 40%, has reached to 88%. So whatever alerts the team is getting now, 88% of the accounts are being identified and marked mule well in advance. Bank is very closely working with the Reserve Bank of India also for Reserve Bank of India Innovation Hub with regard to integration with the Mule Hunter and ULI also. ULI we have already onboarded, and many services we have started using. Some services are in pipeline. So in this quarter, we will see that most of our services available in the ULI platform bank will be integrated. Thank you, and this was the major important highlights, I will say, which I wanted to share with all our colleagues in the analyst fraternity, and I have my EDs also if they want to add anything. Otherwise, we are open for the question answer session. Thank you very much.
Thank you, sir. We will start the Q&A session now. Participants who wish to ask a question, please raise your hand. We have first question from the line of Mr. Ashok Ajmera. Ashok sir, you can ask your question.
Yes, hello.
Hello. Yes, Ajmera.
Yeah. Am I audible, sir?
Yes, sir. Yes, sir.
Sir, at the outset, compliments on business growth. It is a time when others are facing problem and they are going in degrowth. You have grown well. I mean, even 2% of this growth in the quarter in the overall business, and 1.73% in the deposit and 2.32 in credit is really commendable in this environment. So my compliments to you and both the EDs and the top management team for the same. Having said that, sir, we have little bit lagged on the profitability front, maybe because of the margin pressures, and because of that, I think RBI rate cuts, another combination which you can explain little more in detail. Our net profit operating profit also has gone down, and eventually, I mean, accordingly, consequentially, net profit has also gone down. And one major contributor is a lesser recovery from the written off account, I think, which is almost about 500 crore. Had that recovery been even little better or as equal to the March quarter, I think on the recovery from return of account is only 425 crore as against 954 crore in the last quarter, which is a major. To some extent, the treasury profit has added 150 crore more than the last quarter, but that is the major dampener in our profitability. But considering the business growth, and we would like to hear from you the targets for this year, FY26. Many banks are shying away from that because of the uncertainties, but we would like to have it. So this is one. Secondly, sir, there is one note on the note number 10 on SRs, security receipts, in which because of the change in the provision guidelines of the RBI, the note says that 274.95 crore have been received in this quarter. It is received or it is provision return? I mean, provision is reduced or this amount is received or it's a fresh SR? What is it? So this is my
fresh SR. Fresh SR.
These are the fresh
Fresh
SRs.
SR. Yes.
So means 85%, 15% must have been in
Yes,
cash
yes.
recovery.
Yes.
And this is the amount of the SR in the fresh
Yes.
thing. Okay. So provision might have been written back in the earlier quarter itself when the regulation
Yes.
came. I think extra provision.
Yes.
So that clarifies this point. And one point, sir, on this, I think MTNL also we have some small exposure of I think 273 crores. So how much provision total has been made against that amount so far? Maybe as per IREC norms or even more, as you are saying that your floating reserves, you have got some hidden reserves still now. So whether it has been fully provided for or what is the percentage of them? My last in this round is on the SMA2 numbers. So SMA2 numbers in this quarter has gone up from 66 crore to 696 crore. Maybe something from SMA1 spilled over to SMA2. So what is the status of that, sir? I mean, whether some recovery has already taken place in July against that upgradation or they still persist? And can you give some color on that kind of, and that one account, one Bitcop account which you said is slipped. So how much amount of that out of the total slippage of 608 crores? So these are some of my questions, data points and observations, sir.
Thank you, Almiraji. I'll go one by one. First was about the operating profit and net profit. See, if you look at, you rightly pointed out that last year we had a good amount of return of recovery in last quarter particularly. That was in around 900 crore. If you recall that we were expecting some one account to be resolved in this quarter, but that recovery came in the last quarter. That was a bonus for us in the last quarter. And as a result, our recovery return of account was higher. Second, in last March quarter, we resolved, which account is resolved, it had also a component of around 280 crore of interest income, which was booked. So if you look at my interest income during this quarter, though the advances have grown in this quarter, but interest income has come down. The basic reason for interest income coming down in this quarter from advances was that 283 crore rupees which was booked as a interest income last quarter on account of recovery in return of account, which was not available in this account. If we discount that and these two things, you will find that with the growth of business, though there is an impact of repo cut also, but we were able to have our interest income intact during this quarter, barring if we exclude 283 crore of income for that quarter. Right. So,
yes, sir.
In spite of these two things, there is a marginal decline in operating profit and net profit during this quarter. So, the growth has contributed to the profitability, though the impact can be seen in our NIM also. Slight impact, I think 4 pips impact is there in the NIM also. Our cost of deposit is also coming down now. Our yield on advances also there is a slight impact. But having said so, this cost of deposit may come down further in the coming quarters because repricing of the deposit will keep on happening every quarter now. But the repo cut till now, which was probably front-ended, which we were expecting that repo cut will come in stages. So it was front-ended. It had impacted slightly higher in this quarter. Maybe coming quarters we will have a better visibility of the things. Now coming to your targets, you asked about the visibility of the target. See, we have given a guidance of around 12 to 14% of growth in advances, and if you look at our advances have grown by 16.48%. And from where our growth has come from our home loan, our vehicle loan, our MSME segment, and our agri segment. So these are the components, or the, I will say, the engines of our growth. And we our products are well aligned with the market. So our teams are already active. The momentum which we gained in the last year, so that momentum is continuing. So we expect that we will be within our guidance of the growth, credit growth of 12 to 14% by the year end. Deposit growth, we have given a guidance of 10 to 12%. We are this quarter we are within that guidance, 11.37%. But considering the CRR liquidity which will be available now in the next quarter onwards, so we may be having a surplus liquidity available. So we may have a slight cut in our deposit guidance, maybe after seeing the performance in September quarter. But as of now, we are not making any cut in our guidance. So 10 to 12% we are continuing with our guidance in that. And CASA, we have given a guidance of 37.37 to 38. We are marginally lower than 37, but we expect that the way now the market is behaving, mutual fund industry, certain cash flows are now less. So we expect certain amount to be with the banks. So we expect that we may touch again 37%. But I think this will continue to be a challenge, not only for our bank, for all the banks. Third, sir, SR, I already clarified that SR we have received in this quarter, and existing SR which are available with the bank, we are already holding the provision. We have not reversed the provision. So existing, that our notes we already say that around 48 crore of SR are available with the bank. We continue to hold that provision. We have not. This 275 crore we have taken as per the new norms, new guidelines, right? Third, sir, you talked about MTNL exposure. MTNL, we have already having 100% provision in the MTNL account. So there is no room left for MTNL account. Another was your SMA numbers. Sir, if you look at SMA, it is, you are right, that 66 to 96. Basically, this is because of the last year, if you recall, that quarter was for 89 days. That was not, I think, 1 day differential was there. Because of that, certain accounts, though technically they were in 2, but they were reflected in SMA 1. So, but if you look at overall bucket, and if you look at previous quarters, like December quarter and September quarter, you will find that overall numbers are almost in this range only, SMA 2 range only. So there is no much difference. Only this March quarter was exceptional, where because of this 1 day differential, it could not, they did not cross 60 days. So they were in the SMA 1 bracket. So that is the reason that was there. That another account which slipped 100, that is exposure is around 137 crore. So 137 crore. So if we exclude, then our slippages are in the similar range as in the last quarter. But including this also, our overall slippage ratio remains within the guidance level.
Point well taken, sir. You have explained it very much in detail. Just one or two small data point. Our employees cost has come down by about 350 crore as compared to the March quarter, 1,276. Similarly, our other operating expenses have also come down by almost about 200 crore. So what I would like to know, whether this is going to be the trend for the remaining 3 quarters, maybe because March quarter needed some more spending, or
yes,
the subsequent quarters will be higher on salary than the operating expenses.
See, this salary and staff expenses, AS 15 provision will be in line with this quarter only for the next 2 quarters. And last March quarter, we provided for the PLI. and the AS15 provision was there.
Yes.
So whatever shortfall was there, that was provided for in the March quarter. So that, and then PLI provision was also there. So in this year also, in March quarter, PLI provision will be there. 150 crore of PLI provision which we kept last year in March, which we will be using this year. And in the March quarter, basis the performance, then we will making a additional PLI provision for the this next year also. So for the next 2 quarters, I feel that this should be in line with this quarter only.
Sir, if you permit just one, this RBI relaxation on asking for the collateral of below 2 lakh loan for that agri from the agri loans and the farmers. How is it going to help us growing our book on that account? Because now we'll be having at least some collateral against those loans we can officially ask, ask for. So what is our strategy on that, and how much, additional growth you see because of that?
We have not very large presence in the south where prominently this gold loan portfolio is there. But we, over a period of last 1 year, we have already built a gold loan portfolio of around 10,500 crore. And with this new relaxation available, I think it's going to benefit the bank and the industry as a whole, because there was a lot of ambiguity, or I will say clarity was not there, whether they can be classified as agriculture or they can be taken as a collateral or not, because RBI guidelines say below 2 lakh you cannot take collateral.
Yeah.
Now having come this clarity, so we can go at least in a big way to converse our gold loan portfolio also in the south and in the north or east also.
Okay, sir.
It's
Thank you, sir.
opportunity.
If I get chance again, I'll come back again for some more discussion. But let others also have the opportunity. So thank you very much and all the best, sir.
Thank you.
Thank you, Ashok sir. The next question we have from the line of Nitin Dharmawat. Nitin, you can ask your question now.
Hello, am I audible?
Yes, please, Nitinji. Please go ahead.
Thank you so much, sir, for the opportunity. So my first question is related with the return on assets, ROA. It has been hovering around 0.7 to 0.75%, and it has come down during this quarter because of the net profits. So when will we be able to see 1% ROA or crossing 1% benchmark? Does the bank have any such target? Management has any target in mind for 1% as well?
See, Nitin, if you look at our gross NPA and net NPA, we have been consistently coming down, and our net NPA stands at around 998 crore only, 1,000 odd crore. So going forward, if except that slippage, one additional account in this quarter happened, the slippages are likely to be within the range which we are expecting. So then additional provision requirements is going to come down in the subsequent quarters, maybe a quarter later. So I believe that from next year, first quarter or second quarter, we may see that we reach or cross at least one ROA going to come, because the way the portfolio is behaving, our SMA levels are there. SMA level more than 1 crore we declare, and more than 1 crore portfolio is around 1,550 crore only currently, and that includes SMA 0 also. It is not that all includes SMA 1 and 2. So SMA 0, 1 and 2, all three put together is 1,550 crore against a book of 2,20,000 crore. So that is not even 0.7%. So I believe that maybe next year anytime we will see that bank crosses 1% ROE.
Okay. My second question is, any possibility, see this amount is small in MTNL, but do you see any possibility of recovery in MTNL account?
Yes. Discussions are going on. Bankers are waiting for a favorable solution so that not only the employees, all stakeholders, our shareholders are also benefited out of the resolution plan. So discussions are already on. We expect something to come anytime. It is again depending on the acceptability of the resolution which is coming to us.
So will there be any haircut for the banks, or it will be 100% because the government?
As of now, there is no talk about the haircut. As of now,
Got it, sir.
that is not on the agenda.
Got it. And my last question is, sir, do you see any stress in any of the sectors where we are serving currently, or any potential sectors where do you see the stress is building up in general in industry, across the industries?
See, if you, I'll first talk about our bank's portfolio. If you look at our bank's portfolio, if I go back to around 2 years back, our slippages used to be in the range of 2% of our advances. And slowly we have strengthened our credit monitoring system. We have strengthened our recovery collection system also. And as a result, last year we 23-24 we improved in our slippages and upgradations plus collections. 24-25 we further improved, and this year also we have kept a target of 1 to 1.25% only. So that is the last basis the continuous decline in our slippage ratio, basis the mechanism or the control mechanism or monitoring mechanism we have put in place. I am confident that this will be achievable in this year. And if you ask me any particular segment where the stress is building up, I will say that as of now we don't see any particular sector, because if you look at my restructured book also, consistently it is coming down. It is now around, I think maybe 1,500 crore or 1,500 crore left now restructured, and that includes your normal restructuring plus COVID restructuring. So both. So that is very small amount where we could have thought of some, and the slippages which we see, and they are in the range bound. When we do business, certain slippages will continue to happen. But when we look at our segment wise NPA also in various sectors, like in retail, agri, MSME, so that segmental NPA is also, percentage is also coming down on a quarter-on-quarter basis. Slippages are there, but they are not out of control. They are well within the knowledge also and manageable also.
Got it, sir. Thank you so much and wishing you best.
Thank you.
Thank you. We have the next question from the line of Amit Mishra. Amit, you can unmute your line now.
Hi, thank you, and good afternoon, everyone.
Thank you, Amit.
Sir.
Welcome.
Hi. Sir, my first question was on cost to income ratio. I think we are around 54% this quarter. I think it's lowest in 8 to 10 quarters. So what was the reason for this, and do we look similar range of cost to income in future, or 56-57% as we have reported in last 2 years?
See, Amit, if you are right that our cost to income ratio is lowest in the last 7-8 quarters. We were at 61 also. Consistently we have been coming down. There are many contributors to the cost to income ratio. If you look at our operational efficiency, our business per employee, business per branch is increasing. So additionally that is helping the bank to improve on efficiency, and cost efficiency is coming into the play. Then if you look at our cost, overall cost, that is also under control, and cost of deposit also is under, we are managing well. We are with a 37% of CASA, we are able to manage our cost of deposit. And maybe if you can compare with some other banks with this higher CASA ratio, their cost of deposit is still higher, but we are able to manage. We are using all available sources to raise resources, maybe for refinance or overseas deposit at overseas, or to raise we raise equity also. So that is one. Then on yield front also we are very cautious in taking exposures. You can see that our main focus is on the RAM segment, where yields are slightly better than the corporate segment, and our focus is on that. We have already reached around 63% of our RAM segment. So all these factors are helping us to improve our cost to income ratio. I believe going forward, the way we are planning the things to control the cost, improve our income. Fee-based income also you see that we are increasing. I believe that it should be in this range only. I believe it should not go up again. Our conscious effort is to reduce it further.
Okay. Thank you, sir, for the answer. So my next question is on retail mix. In your retail mix, there is line item pool. What kind of types of loans are in there covered in pool?
See, in pool, majority of the pool is home loan pool, and their CIBIL is more than 725.
Okay.
That is our cutoff. 725 is our cutoff for the pool. Majority of the pool is home loan.
90+%, I can assume.
Yes, it should be. It should be. This slide? 9 number. No number. Just give me a second. I'll just open the slide. Yes, 90% should be in the housing loan segment.
Okay. And sir, my last question is on a current account. So we have seen a decline of 8%, and across other banks also we have observed that there is a decline in current account. So any particular reason for sector or our bank, any trend you can point it out?
See, there is no particular reason for any decline in current account. Current account maybe in March, in order to strengthen balance sheet, corporates may be keeping certain amount of liquid in their books. So that may be the reason that in March there was a slightly higher current account balances, and in June there is a slightly lower current account balances. I don't think any other reason will be there. This may be the reason.
Okay. And sir, my last question on the same topic. Do you have average CASA number with you? Average CA and SA during the quarter? Or
Average I can give you separately. Right now I am not having, but it will be around, I think, 95%.
90 to 90.
90 to 90.
Okay.
It's नहीं तो 88 तो फिर तो 2% ही कम हुआ ना. 88 and 93. Maybe 90%. 90%.
Okay.
I can say roughly 90%.
Okay. Thank you, sir. Thank you, sir, and
Thank
good
you.
luck.
Thank you.
Participants, we request you to raise your hands for any question, and also you can ask your questions via the chat window. Till then, we have a few questions from the chat window. The first question is, can you specify the total exposure for MTNL?
Total exposure for MTNL is 245 crore.
Okay. The second question is there any challenge in your SME book? Because your slippages have increased from 198 to 368 crores. So can you give some color there?
See, SME book I already informed that only because slightly elevated because of one account only. Otherwise, the slippages are in the normal range only. That was one account which was already SMA 2 and that was under the watch list we have already declared. And because of that only. Otherwise, slippages in SME book are in the normal course of business and normal slippages are there.
Thank you, sir. We have the next question from the line of Mr. Sushil Chokshi. Sushil sir, can you can unmute your line now?
Good evening, Team UCO, for a very stable result.
Thank you.
So
Thank
my
you,
first question is, in your slide, you've shown vehicle loan at 50 to 82 crores. I know that UCO does second-hand car finance, which yields much better than any of your retail loans. What would be that portfolio out of vehicle loans?
Sir, that exact number.
Vehicle 5 to 8.
No.
Second hand.
That number I am not having, but majority is first hand. Second hand will not be so huge. Majority, second hand will be very small number. May not be very huge. We have just started, but we are not have such a huge portfolio to look into.
Sir, in my view, you are one of the few banks which has started this product, and the
Yes.
market condition for second-hand car is very good, whether it's an imported second-hand or a domestic. And the yield can be almost nearing double digit or at least
Yes.
100 higher than the car loans which you are doing today. In view of that, how are we going to capitalize on the market through a bank's branch strategy, publicity, or what that yields your benefit? Because looking at your guidance, we need support from some of these products to match all your aspirations.
See, Sushilji, in this segment, we are looking for DSA tie-up because these segment generally comes through DSAs only because they there are corporate agencies also like Maruti, they have their own, Mahindra, they have own, Toyota, they have own. So we are planning to have some tie-up with these corporate agencies itself so that the leads flow to us. So that is one segment. There are certain imported car dealers also, second-hand car dealers. We are talking to them also, and we got some leads also. Maybe slightly high ticket leads we got also, and we sanctioned also. That is also there. So apart from branch, the DSA network will be the most helpful. Online DSA network is there. Companies DSA network is there. So that which we are exploring.
So my next question is our RAM and corporate book 6237 or 6337 is stable where we are concerned. How are you seeing other than car loans, which is growing well? Home loans are growing in reasonably double digit. You may do 18-20%. How are you seeing the advances on agriculture, MSME, retail, if you're looking from a yield perspective where the bank's balance sheet is concerned?
See, our home loan around 18% will continue to grow in this range of 18 to 20% home loan segment for last. If you look at last around 6-7 quarters or 8 quarters, our home loan growth continues to be in this range, and vehicle loan growth is also in the range of more than 30% for last 5-6 quarters, and MSME particularly we have started focusing for last 3 quarters where yield are slightly better than these retail loans. And MSME, our target is slightly mid corporate segment than the small micro segment. So that is mid corporate is the segment which we are now focusing in the MSME segment where yields are slightly better than the corporate also and then the retail segment also. In personal loan, the growth is there. Personal loan, we are growing mostly in loans given to salaried employees of accounts, customers getting account with our bank, and pensioners getting pension from our bank. Now we are coming out with a new product that personal loan to salaried customers maintaining account with other banks also through Nudge mandate and all this. That product is also in the offering. So we will try to grow to focus on those areas also where yields are slightly better in the than the corporate and or the home loan segment.
Sir, most of your offerings would be there in the marketplace from private or public sector or small finance bank also. Now, to beat the banks who are in competition, either it has to be TAT, which is a better way to manage this, or it is a rate which is lower than the market. What strategy we are adopting where MSME is concerned, specifically retail, I understand it's a rat race, so nobody can compete with a 10-20 bips difference unless you sacrifice on quality.
See, MSME, we have only one USP, I will say, there is the TAT, where we are focusing very closely. It is being monitored from head office level. Daily, our MSME team monitors the sanctions and the pendency at the hub level. Just to give you some idea about the, I think we have already talked about that. Last year we created specialized hub for MSME segment, and last year because of the creation of the hub, first time in the history of the bank, total MSME sanctions crossed 12,000 crore, which was earlier 7,000 to 8,000 crore. So last year 12,000. This quarter, in the first quarter itself, it is more than around 3,000 crore MSME segments sanctions. So it will continue to grow in next quarter and next quarter. So these MSME focused hubs, along with the tight monitoring, because MSME journeys are all digitalized. That is in the loan processing system. As and when anybody enters their proposal in the loan processing system, it is being monitored and the pendency is being watched at head office level. Wherever the proposal goes beyond that, our team from MSME team immediately gets into action to ask questions why it is getting delayed. So that is the only mantra. If you see our MSME growth for the last 4-5 quarters or 8 quarters, only for last 2-3 quarters our growth has picked up. Earlier our growth used to be 5%, 8%, 7%. Now it is 20% this quarter, previous quarter 18%, prior to that 13%, and otherwise it was not, it was around 7%, 8% overall growth. So focus is purely on the MSME core business growth.
So this business of MSME, average ticket would be 10-20 crores or lower?
No, it is lower also. It is lower also. It is not that we are getting every proposal 10-20 crore. It is 5 crore also, 4 crore also, 2 crore also, 1 crore also. So every type of proposal is coming.
These are what, regional sanction or zonal manager's power, or it will come to HO?
These are the up to 2 crore or 3 crore, depending upon the delegated powers of the hub. They are getting sanctioned there only, and the zones are mostly headed by DGMs now. There they get around 20 crore, and about 20 crore that comes to head office. So we have only 3, one at hub, second is at zone, and third is at head office. So head office gets into action only about 20 crore, zone up to 3 crore to 20 crore, and 3 crore is sanctioned at the hub level.
So what would be the TAT on this product?
See, TAT, if you ask me at head office, our head office TAT, we try to see that 15 to 21 days is the maximum TAT.
As a bank average, you may say it, because I don't want to dismerit the retail or a regional level. On average, can I consider 3 weeks or 2 weeks as a good time?
2 to 3 weeks will be reasonable for all levels. 2 to 3 weeks.
Sir, my next question to Mr. Kamble: what is the unavailed credit today where corporate sector is concerned, which you have sanctioned, or what is visible in pipeline?
See, it should be around 6,000 to 7,000 crore, which was availed earlier, and because of the rate to sensitivity, the amount we got back, and another 5,000 to 6,000 crore is sanctioned, which are yet to be disbursement. So overall, if you ask me, 10 to 12,000 crore is the unavailed limit for limits which were already availed, paid back, and which limits which are yet to be availed. Both put together.
What is the sanction pipeline looking like?
Sanction pipeline will be again 5 to 7,000 crore currently.
Sir, most of the large PSU banks or peer banks have, I am not mincing words, but have shredded assets where NABARD, SIDBI, NAFID, or equivalent agency, whether PFC, REC, where the yield is below 6.5, 6.2, 5.8, 6.3. What is the strategy at UCO? Are we still having advances to this few selected PSU and locking in, or we have given it up?
See, you talked about 2-3 names. We don't have exposure currently. we have taken back long back, so we are not there. I think for last 3-4 quarters in this. Maybe in 1 or 2 NBFCs we are still there, but our rates are slightly better than the rate which you told. So it's not that it is still there for NBFC, but other than NBFC, it is already back on. So that is already. I'll say that unavailable. That is already.
Sir, understood. You are not willing to lend to them. It's good for us. Third is, what is your outlook on treasury? Will you have a bumper profit in coming quarters, or it's just a sustainable trajectory as RBI has already done all the prediction? Maybe one more repo cut may come in 1 quarter or 2 quarters later, one doesn't know. इंडिया का बैटिंग टॉप एंड पे होगा या टेल एंडर करेंगे?
So yes, socially we all know that RBI cut repo rate in the last quarter. It was 0.75 basis point, 25 in April and 50 in June again. So the June quarter has seen a bumper profit from Treasury. You can see from the numbers also. We have around 4 times more profit from Treasury in the June quarter. So we have taken the opportunity. And now going forward, I think in the current quarter, so far the yields are stable. And we don't think that any cut would be there in the current quarter. If at all, it will be maybe in the next quarter. So the current quarter will be stable quarter. Maybe still we have some opportunities of trading and booking some profits from the treasury also. That will continue as and when we see the opportunity. So the reasonable number of profitability might be there.
So how open are we to buy corporate bond which are yielding better than government bond?
That also we are continuously seeking the opportunity in the market. In the last quarter also, we can see that we have increased our non-SLR portfolio, particularly in the corporate bonds. So that we are continuously seeking for the opportunity in the market. Wherever the yield is okay and it meets our requirement, we are going into that also. So we'll continue to invest into the corporate bonds.
Are we investing in REIT and InvITs also?
No, not yet. Not yet. We have not yet invested in any REIT or InvIT like
So
things.
please have a look
We
at
are
it.
particularly in the corporate.
Yes.
So we are seeking all other opportunities also. We are exploring that also. We'll take a reasonable call as and when it comes to us.
Sir, good luck to the bank and you may have the best year in coming time. Sir, last question I forgot. There is chatter from the ministry that you may have to do a QIP again. Is it soon or it is in the year?
See, we have already taken the approval of the shareholders after the board recommendation. Shareholders have already given approval, and bank is having it in government holding of 90%. So we will be reaching out to the government also for giving their approval. And once approval is received, basically the opportune time, if required, we may go for the best way to raise capital. So whatever is the mode available, maybe OFS or QIP or whatever. So we don't know, but let us see and wait.
Sir, thank you very much and all the best for the year to come.
Thank you, Sushilji. Thank you.
Thank you. We have 2 more questions from the line from the chat box. The first one is for FY25 and 1Q FY26. In terms of retail disbursements, especially in housing, what is the contribution of origination from DSA, branches, co-lending, assignment or others?
See, if you ask me in the housing loan, in the pool segment, there is a contribution of, I will say that is I will not say co-lending or the co-origination, but that is in the pool. The growth is in home loan. If you look at our home loan portfolio particularly, there is no co-origination, nothing. That is purely branch initiated housing loan. Yes, there will be a contribution of DSAs in that housing loan segment, but exact number that how much origination was done by DSA that I am not having. But that number is clearly branch and originated of DSA initiated housing loan. Co-lending and pool, we have a separate number that is already there around, I think 60, around maybe 5,600 or 5,700 crore is from pool, housing loan pool out of 6,500 crore.
Okay. The next question is, how can NIM decline by 4 basis points when yields decline by 30 bips QOQ, while cost of funds declined by 5 bips QOQ?
See, if you look at our income total 30 bips yield. In the income, I explained that last quarter we had 283 crore of additional income in one of the accounts, and which was a TW account which was booked. So yield was slightly higher during that quarter. Now with this rate cut, I think the yield was expected around 22 bps with this rate cut. So yield, the expected yield was 22 bps, but actual yield is around 30 bps. No?
Weighted average yield decline due to the repo cut was around 22 bps.
22 bps, weighted average. So that is basically because of some additional recovery, one-time recovery, one of interest income in March 25.
So one more thing is there that this yield is only on the advances, but if we see the investment yield, that has declined only marginally. So we have around 23% portfolio in investment also. So the overall means NIM is protected through that also.
Thank you. We take that as the last question. I request MD sir for any closing remarks.
Thank you. I thank you all, our analysts, and for taking out time and attending our call and supporting the bank, I will say, and we'll continue to strive for the better performance in quarter after quarter as we have been doing for the last 2 years. So wishing all you also and to the bank also very best, and look forward for your continued support in the times to come. Thank you very much.
Thank you very much from our side, sir. We generally don't get the opportunity, but in your case, I got it. So thank you for sparing your time for the analyst community. Thank you very much, sir, and all the best.
Thank you.
Thank you.
Thank you everyone for joining the UCO Bank earnings conference call. You may disconnect the lines now.